Hi, Dr. Marley. It's Celeste. So for my final accounting project, I'm going to be teaching my friend Tony accounting. Well, actually, not all the aspects of accounting. I decided to focus on internal controls because I found those most interesting in the class. That was like my favorite part of the class. So I'm going to start off by some notes here, but I'm going to start off by telling you about fraud. So fraud, there's many different kinds of fraud, but one of the major aspects, or one of the biggest types of fraud, is occupational fraud, which is, well, defined here, it is the use of one's occupation for personal enrichment through deliberate misuse or misapplications of employers' resources. So pretty much it's like a fraud scandal explodes, it's usually an occupational fraud. It's someone in the company who ends up exploits like the company's resources in order to gain something. So it's usually personal gain. So it's usually like someone really high up. And this can be exemplified through like Enron and WorldCom scandals that have happened in the financial world. So in order to stop this fraud, we have the Sarbanes-Oxley Act of 2002, and pretty much that helped a little bit with fraud scandals because it ensured that financial statements were filtered through many parts of different departments and stuff so that they can check multiple times and see if the financial statements are true, because if they're false, then that company ends up gaining money, but it's not meant to be like that. Like if you're going to gain money as a company, you should do it right. Okay. So Sarbanes-Oxley helped with that. So it's called this, or they just call it the SOX. It's like the SOX. So there's 3 elements present for every fraud that occurs. There's the motive or pressure, like someone feels the need to commit a fraud, such as the need for money or the need for power, whichever one. Then there's rationalization, where they go through a period where they try to justify their acts, of like justifying why they should steal this money from the company. And then in the end, there's the opportunity, which they see a situation where they can easily slide in and then just take money from the company. And for a long time, a lot of people don't realize it, but then it soon unfolds because at the end of the day, like auditors come in through the company and they have to check all the financial statements, and usually something doesn't balance out.
Right.
So then they end up having to, they go through this whole scandal and they end up getting caught.
Got it.
Exactly. That would be the what we call the fraud triangle. In order to stop this, we have, besides the SOX Act, which that helps tremendously, there's also internal controls, which I'm going to read from a list, but I'm going to explain each one. So there's COSO, which is the Committee of Sponsoring Organizations, and in 1985 it dedicated to improving quality of financial reporting through effective internal controls. So COSO is basically, COSO is the Committee of Sponsoring Organizations, and pretty much to make sure that all the financial statements, they're right and stuff, and that helps as an internal control. But internal
as the year goes on or something.
As the year goes on, it's just it's a giant organization that makes sure that. Okay, it's a giant organization, and they're dedicated to improving the quality of financial reporting. So they make sure that every company has internal controls to prevent fraud from happening. Does that make sense?
Yep.
Okay. So, pretty much internal controls. There's monitoring, which is the internal activities and reporting of deficiencies is required. Is required. It includes formal procedures for reporting control deficiencies. So if something's going on, they have to monitor it. So they have it's monitoring through the whole company, and they make sure that nothing iffy or nothing weird is going on, because if it is, then they have to. Right. It messes up the whole company. They have control activities, which is policies and procedures that help ensure management directives are being carried out, or directives or directions, authorizations, reconciliations, and separate duties. So that pretty much, that means that like management, like whoever is higher up, like there's one in each department and stuff, and they make sure that everything's going smoothly in their department so that they're not in charge of another department. And so they have like that, they have that's control activities, so that they control the activities in each department to make sure that nothing's going on.
Right.
And then there's
number 5?
no, that would be the second one.
Oh. So every single, okay, no, I can't.
Yeah, no, there's COSA, which is the organization itself.
Oh, my bad.
Yeah, no, it's fine, it's okay. Yeah, sometimes it gets confusing, but let's see. There's also risk assessment, which identifies and analyzes internal and external risk factors that could prevent a company's objectives from being achieved. So actually, I just recently learned in business, it's called the SWOT analysis, which is the strengths, weaknesses, opportunities, and threats of a company. So I feel like that would help in a company, like when they're doing in order to not have fraud. It's like, so when a company does a SWOT analysis, they state like all the strengths of their company that they should focus on to enhance even more, to help it even more. Then there's the weaknesses of a company, which they have to focus on in order to improve what they're doing wrong, or if something's not like what they want it to be, like say they're not making enough money, or like one of their products isn't selling, and that's a weakness in their company.
Right.
Then they have to either get rid of the product or change it or do something with that product that will help the company more. And then there's opportunities, which is a company has to look like they have to look externally and internally to see what opportunities they have. Like say they're a global company, so they can have they have the opportunity to sell in different parts of the world, in different countries. So there's that, and then they have the threats, which is like different threats, like what companies are threats to them, what do they see as threats, like say someone's selling the same product as them, then they have to do that too. But I feel like for like that, like the SWOT analysis, since it's internal and external, I feel like that helps like in risk assessment with financing, because, or not financing, but accounting, because you have to like make sure like the external risk factors or external factors from a company influence the company positively. So that will help with if something happens externally, say like another company has like fraud, they won't be affected by it. Does that make sense?
Sort of.
Okay, what doesn't make sense?
I don't know. I just don't understand how it prevents fraud, like in general.
What prevents fraud in general?
The SWOT thing.
Well, no, I'm just saying like that's like I feel like that's something that would help. Like I just because we just learned it in business, so I just feel like that, like personally for me, like if I were like the SWOT analysis, because it helps, like because they look at like every single aspect. Yeah, it helps keep things in line. It's like every aspect of the company, like they can see. So like I don't know if it would help fraud, but it would help a company in general, and it might tie into fraud. I'm hoping it does tie into fraud.
Okay.
And then there's the control environment, which sets the overall ethical tone of a company with respect to internal control. And it includes formal policies related to management's philosophy, assignment of responsibilities, and organizational structure. So I guess control environment, just like it makes sure that like the environment that you're working in is completely like it can prevent fraud. Like it won't like give you the opportunity to perform fraud. Can you perform fraud? I don't know how to word that sentence.
Yeah, sort of.
Yeah,
It's
sort of.
in the right verb category, but
Okay.
yeah.
Good. Okay. So there's that. So and then the last one is just it's all information and communication, which is all just in a company you have to be able to communicate with all the different aspects of the company, all the different departments, and that everyone's in line, because if seriously one person can just go in and commit a fraud and the entire company can collapse.
Right.
Like I just watched it. I'm gonna show How to Get Away with Murder. There was this woman, she was being tried for fraud in her company. She apparently she bought stock from another company, because she was
With
friendly.
the company's money?
No, with the company's money, but she was like friendly with I'm not sure of what he is, of the other company.
Like,
So like usually that's what is it called? There's a term for it, that when like a company, like when you buy someone's company stock, but you like know not a buyout. I'll get back to you.
Okay.
But yeah, so, and then she was being tried for fraud, but it turns out that there were 2 people in her company that had like logged into her account, and because she trusted them, so they logged onto her account while she was gone, and they bought the stock, and then they framed her for it because they wanted her company. But the thing is, if her company had fallen, like she built her company so high, like if the company had fallen, like they wouldn't have gotten anywhere, like there would have been no power and stuff. So that's like an example of fraud. Like people that you know in a job, like anyone's capable of fraud.
Right.
So there's that. And let's see what else there is about fraud that I can teach you about. Pretty much, okay, there's one that I starred. It is, everyone in a company has an impact, and the top executives are the ones who must take final responsibility for their establishment and success. So, I mean, if something happens, it's not going to be like anyone like in the small little ones that actually it's going to be like framed on the higher people. So that just goes back to my example. There's also preventative fraud, and then there's detective. So or preventative measures. I actually think I got this wrong on the test. Let me find it in the book just to make sure that I did this right. Because it'd be bad if I was teaching you wrong. Okay. There's preventative control. There you go. There. Preventative controls, which are designed to keep errors or fraud from occurring in the first place. So, like there are preventative measures such as the separation of duties, which is pretty much you don't ever like let someone be responsible for one aspect of the company as well as another, because they might be able to tie into each other, and that can just completely blow over the company. Then there's physical controls over assets and accounting records. So a lot of records can be altered, can be changed to show that the company is getting more or earning more than they are actually making.
Right.
So
That's
they
fraud.
don't. Yeah, that's definitely fraud. Big fraud right there. That's like I won't say one of the most common, but it is something that does happen. And there's proper authorization to prevent improper use of the company's resources. So pretty much you just how to handle cash receipts and make purchases, which means that like don't let like someone lower in the company be able to make such high or big decisions for the company.
Right.
Because then the fate of the company can lie in one little person's hands, and they shouldn't be able to do that. So like everyone needs to have a responsibility, but they need to make sure what their responsibility is, and that it can't be like such like say like you're only in there as an intern, but they allow you to make like one really big decision for the company. Mm-hmm. Like that's not really like that intern can mess it up. And sometimes there's accidental fraud. Accidental fraud is they accidentally like type in like an extra zero or something.
Yep. And
all of a sudden it makes it look like your company's making billions instead of just millions.
Right.
So it's really big. But that's accidental, and a lot of times you don't really know when it's accidental or when it's actually fraud, like they're actually committed it. That's why sometimes it gets really hard to detect which one.
Right.
But it happens. And then there's also employee management. So all employees should have they should carry out their job duties. So they should all know. Every company has internal control procedures. So whenever when you're in a company, like they will tell you this and this and this, you have to make sure that you follow it, because if not, it couldn't.
Right.
And then there's also e-commerce controls, which is like all the electronical aspects of a company. So like if you buy or sell over the internet, so only like authorized people, like only specific people should have the password. Not everyone should have the password, because then anyone can get in.
Right.
So those are just some preventative measures. So that's preventative controls of a company. But then there's also detective, which means that if you can't prevent it, you at least have to detect it. Which means that Like, if you don't know that there's fraud going on, like, preventative would completely prevent the fraud from even happening in the first place. But detective is once you figure out there is fraud, what do you do? So there's reconciliation. So the management should periodically determine whether the amount of physical assets of the company, which is cash, supplies, inventory, and other property, match the accounting records. Because if they don't match the accounting records, are you comfortable? Because if they don't match the records, then there's something wrong. So either their actual inventory is wrong, or the records for their inventory is wrong.
Right.
Or if it says like there's more cash in the statement, but there isn't, the company actually doesn't have that much cash. You have to make sure. So like that's why they have auditors and they have accounting personnel which routinely like check every so often. I would assume they check it every fiscal year. No, every fiscal year is just 1 year. Every term, is it a term? Every quarter. There you go, quarters. A couple of months in the company, I think. So
right, yeah.
I would feel like they check that
right
every so often to make sure that it's still there. There's not something going on. There's performance reviews, which is the actual performance of individuals or processes should be checked against their expected performance. So a lot of times when you go into a company, you're observed. So obviously for performance reviews, it's just they go and they review, they make sure that you're doing everything right, because if they detect that something's wrong, then it could be pinned on you, even though it might not have been you. So you have to check to make sure that you're doing exactly what you're told. I mean, if you're going above and beyond, like, that's good, but at the same time, you could commit fraud and no one would know. Because they'll always be like, oh, that's the one person that always does this and this, and she's so good and stuff, but that's not what you're supposed to be doing.
right
So you gotta make sure that you're doing what you're supposed to be doing, so you're not fraud. And then there's audits, which I think every public company is required to have an auditor come in and check their balance statement, their cash flow, all of that, all the financial reports, to make sure that the company is reporting exactly what they have.
right
And so responsibilities for internal control, like I was talking about earlier, the top executives are the one who has to take final responsibility, even though it might have been someone smaller. So like when I was telling you like the example of the show that I was watching earlier, she's the top, she's like the president of the whole company, and she got pinned for it even though it wasn't her. It turned out to be two people. So in the end it's kind of sad because the top dog usually gets in trouble even though it's someone else smaller
Right.
in the company.
but it's their fault they didn't detect it.
It is their fault, but it is their,
They're responsible.
Very true. That's usually why they get like
So
sued
much
for
money?
it and stuff.
Oh, well that's good.
No, when they find out that there's fraud, they're usually like the top person is sued, or the company is sued in general,
Right.
instead of like the smaller people, because the big people are always in charge of the smaller people. And they're not small, but you know what I'm talking about. Okay.
Yep, the fat people are in charge, I got it.
That's not what I would put there. Anyways, okay, so the last thing is collusion, which that is when two people decide to not go with the, okay, let's read that, because that's not realistic. Collusion, as my book reads, is it occurs when two or more people act in coordination to circumvent internal controls.
Can you repeat that, please?
Collusion occurs when two or more people act in coordination to circumvent internal controls. So, here's an example. So, like, if a ticket cashier and a ticket taker at a movie theater,
Right.
They decide to work together to steal cash.
Right.
I'm not sure how that would happen. Maybe,
Right, but I mean, I get the idea.
yeah, I'm trying to think of an example, but I'm not really sure. Okay. Oh, because apparently there was a movie ticket example or movie example earlier, but I didn't. That's okay. Theft will be much more difficult to detect if two people in a company who work so close together work together.
Right.
So, fraud cases that involve collusion are typically several times more severe than any fraud cases involving a single perpetrator, because two people can turn into four people, and then everyone's in on it except for the top dogs, and then the whole company can just crumble on itself.
Right.
And that's actually really sad sometimes, because sometimes people actually like built it like on their own blood, sweat, and tears to build a company, or it's like a family company. It's really sad, but it happens. So here in bold it says, okay, top level employees who have the ability to override internal controls. Features also have opportunity to commit fraud, which is actually very true. A lot of times it's usually the CEO who gets caught committing fraud. And I don't know why they would do that if they make so much money.
Right.
But it's probably
You got
because
me there.
they just want more money. Like usually a lot of people, like once they get into that position, they get really, really greedy. So a lot of it like is motivation for it is actually greed. That's what motivation, like the motive, like I was talking about earlier in the fraud triangle. A motive is usually greed. You want more money, power. Usually just end up getting caught and sued for millions upon millions of dollars.
Right.
And then they lose their job. And then they're probably not going to be able to get a job again because people are going to see, oh, you committed fraud. I don't want you in my company. So it's kind of sad. I don't know where they go, but. And then effective internal controls and ethical employees alone cannot ensure a company's success or even survival. So in the end, it's actually very sad, but in the end, you cannot completely prevent fraud.
You can't.
So in the end, that's really bad, but you can't prevent fraud. But at the same time, if you can't prevent it, at least detect it early on,
Right.
so that your company doesn't lose
Like cancer.
millions of dollars. Yes, it's like cancer. If you can't prevent yourself from getting cancer, at least you can detect it early on so that you can be treated for it. It's the
There
exact
you
same
go.
thing with the company. So
Now I'm just throwing at you by.
wish I had more for you, but
Cool.
that's it.
Super
That is, and I
awesome.
hope that I have taught you enough about fraud so that you never go commit fraud. Because the thing is, Dr. Molly, when he was teaching it to us, he was like, I'm going to teach you about fraud and how to commit fraud so that you don't ever commit it. And if you do, it would be really disappointing. I'm not going to disappoint him. I'm not going to go commit fraud.
You hear that?
But if you do go commit fraud, please do it
I'll just-
diligently and smartly.
I'll just write, Celeste was here.
Please don't. Please don't. But yeah,
Cool.
so remember, if you can't prevent fraud, at least detect it.
Or beat him. Or join him.
If you can't beat them, join them. Just kidding. No, don't do that. No. No, but you know what I mean. So
Right.
that's about it for fraud. I'm pretty sure. I would have taught you journal entries, but I'm still getting the hang of those. Studying those for the exam. So.
Hey, good job, Celeste.
Thank you. I hope you enjoyed that.
Very
Thank you,
much.
Dr. Marley. I hope you enjoyed my video.